Good morning. Welcome to another weekly update for the 4th of June. And we've seen over the last couple of days the US market really turned down hard on the back of some pretty unimpressive jobs numbers. And certainly the cracks are starting to appear in the US economy. And doesn't mean that their stock market can't keep going up, but it just means now that we're going to have another corrective phase. And in fact, I really think, given the time of year that we're in, that there's every chance that we might just get some sideways choppy action for perhaps the next 2 to 3 months. That would not surprise. But as you'll see from the charts, there is still no evidence yet that the US is doing anything other than going into a bit of a normal correction. So let's just start off initially with the just the important information regarding the fact that all this information is of a general nature only. It's intended for you to use with your trading plans, and at the end of the day you need to make up your own mind about your particular trades and investments. So the action for the week, the S&P index closed sharply lower, with most of that damage occurring on Thursday and Friday. We formed a new short-term low in the S&P, and we'll have a look at that chart in a minute. And so we're definitely in a corrective mode there now. The US dollar, and this was exactly what I wrote last week, tanked hard, and which it did last Friday as well. And this time it broke the 61.8% support of that recent rally up. So I would say now that the US dollar rally is a shot duck, and it's heading back down again, which in itself is a bit supportive of the stock market. Gold was up for the week and is still heading for 1570, where there'll be resistance, and a break then of 1570 will see it push on into the 1600s. Silver was lower on the week, still pretty volatile. This is what I expected after such a significant fall about 3 or 4 weeks ago. It just takes a while for this to play out, and it could be a few more weeks yet before silver is ready to start trending up again. It did reverse very nicely off its 61.8% support level on Friday night, so I'm hopeful that maybe we've seen the lows in silver for this phase. And the ASX 200 index has failed again to form a new short-term high, and it's really just broken the monthly trend to the downside. So let's have a look at some of those key charts. So first of all, this is the US dollar index. So we'll pan back and have a really big picture look. You can see it's been in an awful downtrend since this big triple top was completed in February of 2002, and that was when the US government really started churning up the printing presses, and the value of the dollar has just absolutely tanked ever since then. You can see that we've been roughly sideways since about December of 2004, pretty volatile. We've just had a bit of a recent rally, but really this recent rally dwarfs by comparison to some of the other rallies, so it was pretty weak and pretty short really. So I tend to think that this rally is over and we're heading lower. So US dollar down around about 71, which to me would be, there'll be some support here at 72.8, but I would expect that'll probably get taken out. And the US dollar down at those levels will correspond to an Aussie dollar in the vicinity of $1.15, possibly even $1.20. So it's going to be more pain for a lot of Aussie exporters. Let's have a look now at the S&P. So first of all, on a monthly chart. So this is the big picture. These two big candles here were May and June of last year. You can see that May was fairly significant. That's when we had the flash crash in the US. This May was nothing like that. It was quite mild. We've started off June with a more significant decline, but you can see that it's still, the moving averages are still strongly up. The price is still above the 10-month. So this is, the red is the 10-month and the blue is the 15-month. So you can see we're still clearly above these these moving averages, and to get a top or a change in trend, you've really got to start to see the indexes break down and trade significantly below them. So we're nowhere near that at this point in time, and then you need that to occur for a period of several months before these averages start to roll over. And you'll notice that typically we will get a decline, and then we'll get a bounce, and then we'll get a further decline. So if we ever do get caught in a period where the market drops suddenly, don't panic and dump everything, because almost invariably you'll get a rebound. So that would be the signal that the trend is finished, but then wait a month or two for the rebound, do whatever you need to do to adjust your position, and then we can sort of look for the decline. But that's really on an investing time frame. So bottom line, I'm not seeing anything at the moment that suggests that we're changing trend. This is it on a daily. We've now broken to a new low, a new short-term low. So and we also closed. So panning back, if we look at the picture from the run from this low in March to the high, then we're looking for 1292 as a possible stopping point. 1282 is the next possible stopping point, which would have us on the 150-day moving average. Or if you want to look at perhaps the first level on a bigger time frame, so this is really the run now from the bottom of July last year, then we'd be looking for 1233. So they're the three key areas for me: 1292, 1282, possibly some support here at 1248 again, but really 1243. So they're the areas that we need to watch. I would say, given the significance of this fall on Wednesday, which was much bigger than anything that we've seen for quite a long period of time, I would expect that maybe we are going to see 1282 at least, or possibly lower. So we'll just have to see how that plays out. Now let's have a look at gold. So you've seen these charts in the daily alerts for members. So this is a daily chart. Gold did have a little bit of a look below this trend line on Thursday and Friday, but recovered particularly on Friday, and I think is definitely heading for 1570. Silver broke the trend line, but did bounce off. So the 61.8% of this run from here, this point here, to the recent high. There we go. It was 34 point, it's probably not quite, yep, that's about it, 34.83. We reached a low of 35.11, so pretty close. So we've bounced, reversed off that rather nicely on Friday, closed near its highs. So hopefully silver has bottomed out now. Let's have a look at the Aussie indexes. So first of all, this is the ASX 200 on a monthly chart. And you can see that we have broken and closed below this trend line that had been in place since basically May of last year. So that's significant. Looking at the daily chart, we've failed to form a new high, so we're just getting lower highs, 1, 2, 3, 4, lower lows. So we're basically sitting right on a double bottom, but you can bet that we'll be closing down again on Monday. So I would expect we are going to form another lower low. So therefore the next bus stop is down here just under 4,500. With the possibility of then maybe down around the 4,200 mark if that breaks. So the Aussie market not looking good. Let's take a look at the materials index. So the materials index bounced back up to, didn't quite make the first resistance level here and has turned back down again, so I think we're probably looking at further declines in the materials index down to this 12,800 area. So you can see we had a false break of this range here, and now we've come back into the range. We've got some tops here, which it's basically sitting on right now, but I expect to see that line break. It's the finance index that's really where the damage is occurring. Let's have a look first of all on a weekly chart. So that's the finance index weekly. You can see now we're down underneath the 30-week moving average again for the second time. We've closed below these lows from March, so really not looking good at all, the finance index. Let's just zero in a bit on a daily chart. That's the daily. So you can see really quite a definite downtrend. Last week was a big week down, sorry, the week before last was a big week down, closed pretty close to its lows. Same again in this last week, so we definitely want to stay short the banks because that's looking pretty weak. Next is the energy index, and energy again false break of this trading range, closed back into the trading range, so I would expect that we're going to head down to probably at least this 15,400, 15,300 area. The energy index currently sitting at about just over 16,000, so still some more downside in that market yet. And finally we'll look at the small ordinaries index. So small ordinaries again, lower highs, lower lows. We came up here, formed a double top. We're heading back down, I believe, to 2560, and that support level really needs to hold. Otherwise, we're heading down even further, and probably down around this 2487 mark, I would suspect. So we definitely don't want to be doing too much in the small cap area at the moment either. So let's just head back for the rest of the charts. This is the chart of the copper, the London Metals Exchange copper inventory level. So you can see it's been in a very, very strong uptrend because China basically hasn't been importing nearly as much copper. They've been destocking since the start of the year. Kicked up again a little bit on the Friday, but some of the things that I read certainly indicates there's some leading indicators that are showing that the Chinese are really starting to look at increasing their imports again. So I think we'll see a turnaround in this fairly soon. Copper price did go up, however, on Friday night with the US dollar falling over. So copper still being pretty well supported, back up at $4.15. And as I've been saying for months, we really don't need copper to go up in price for a lot of these small cap copper stocks to be doing really well, and even BHP. It just requires analysts to start to accept that copper prices are not going to be back down under $3, which is where this is where the long-term averages are being pitched at the moment. This is how companies are being priced, as if the long-term copper price will be down here at about $2.70, $2.80, and supply and demand fundamentals just don't support that in any shape or form. This is the nickel inventory, which is doing something completely different to copper. The inventory levels still declining, but also in the medium term, the price is also declining. So it's a bit hard to follow some of these relationships at the moment. This is the tin price. Has taken a little bit of a belting in the last few weeks, but this is just a correction of a very significant rise that probably got a bit overdone. The long-term supply and demand fundamentals for tin remain as strong as ever. We are going to see tin significantly higher than $34,000 a tonne, and that's going to make tin developers such as Venture Minerals or Casbar or companies like that, is going to make them extremely profitable in a couple of years' time. So let's have a look at our strategy, and really nothing has changed from last week. It's pretty much the same. We need to continue our focus on short selling retailers, banks and selected industrials, particularly steel stocks. But in the short term, this is really now a management exercise, because the good entry prices have now passed by. So really it's now a matter of managing them. How do we best take our profits? But the medium term, we're looking to short sell the rallies. So over time, we'll see the banks bounce, we'll see the retailers bounce, and we want to be there waiting to short sell them again. We can start to rebuild in gold and silver stocks, but definitely on the dips only, and trading the ranges on the other larger cap stocks. So really nothing has changed since last week, and I suspect that the next 2 or 3 months might be more of the same. We're just going to see choppy sideways action. I think in these kind of periods you need to be highly selective about what you do. You need to take your profit, take your money off the table, and then wait for the next opportunity. It's a period where less trading, more selectivity, but it's also, if you get this right, these are also terrific periods for making profit, because the volatility means that prices move fairly quickly. So that's it for this week. We'll see you again next weekend. Cheers.